When most Jamaicans swipe a debit or credit card, they don't think twice about what's happening behind the scenes. The transaction goes through instantly, the machine prints a slip, and the purchase is complete. But what if I told you that those two little logos you see on almost every card in Jamaica, Visa and MasterCard, have far more control over the country's banking system than most people realize? In fact, Jamaica's financial lifeline is tied directly to these two global giants. The big question is, does this mean Visa and MasterCard actually control the banks in Jamaica? Before we dive into Visa and MasterCard, let's take a quick look at how the banking system in Jamaica is structured. The central authority is the Bank of Jamaica, BOJ, which regulates commercial banks, credit unions, and other financial institutions. Local banks handle deposits, loans, mortgages, and investments. They also provide debit and credit cards to customers, and this is where Visa and MasterCard come in. Unlike cash, which is issued and controlled locally by the BOJ, cards are tied into international networks. So while the money belongs to you and your bank, the infrastructure that allows you to spend it digitally doesn't come from Jamaica at all. So what exactly do Visa and MasterCard do? Many people think they issue the cards or lend the money, but that's not true. Your bank is the one lending you money, in the case of credit cards, or holding your money in the case of debit cards. Visa and MasterCard are payment networks. Their job is to provide the rails, the digital highways that move money between your bank, the merchant's bank, and sometimes even banks overseas. They guarantee that when you swipe your card in Kingston, the payment can be approved in real time, even if the seller's account is based in New York or London. They don't hold your money, but they set the rules for how it can move, and that's a critical distinction. Here's where things get interesting. Almost every debit and credit card in Jamaica uses either Visa or MasterCard. That means the backbone of Jamaica's cashless economy isn't controlled locally, it's outsourced. So when you pay at the supermarket or shop online or withdraw money from an ATM that isn't owned by your bank, the transaction depends on a US-based company. Without their permission, the system doesn't run. This is very different from cash, which Jamaica fully controls. If Visa or MasterCard were to cut off access for any reason, Jamaica's electronic payment system would effectively freeze. Now, Visa and MasterCard don't do this for free. Every swipe, tap, or online purchase involves fees. Merchants pay a cut, banks pay network fees, and even consumers sometimes face hidden charges. On top of that, Visa and MasterCard set the rules of the game. They decide on fraud protections, chargeback policies, interest structures, and security standards like chip cards and contactless payments. This means that even though the Bank of Jamaica is the official regulator, the real rules of daily card transactions are set abroad. So what does this mean for the average Jamaican? It means fees on purchases, higher costs for businesses that accept cards, and limits on where and how cards can be used. For example, some Jamaicans find that certain foreign websites don't accept their local cards, not because their bank said no, but because Visa or MasterCard restricted the transaction type. In other cases, disputes and refunds depend entirely on Visa/MasterCard's global policies. At the consumer level, this control feels invisible, but it shapes every card swipe. For Jamaican banks, the dependency goes even deeper. If a local bank wants to issue debit or credit cards, it must partner with Visa or MasterCard. That partnership requires following global rules, paying licensing fees, and meeting strict compliance standards. This isn't optional. Without Visa or MasterCard, a bank can't connect its customers to the global economy. That means Jamaican banks are not truly independent when it comes to digital payments. They are plugged into foreign-controlled networks. Now, here's where it gets fascinating. Jamaica is not alone in this dependency, but some bigger countries decided to take action. In Brazil, local banks and the government backed Elo, a domestic card network launched in 2011. Today, Elo is widely accepted inside Brazil and even works abroad through partnerships. It reduced Brazil's reliance on Visa and MasterCard. In India, the government launched RuPay under the National Payments Corporation of India. RuPay is now one of the most used cards in the country, promoted especially for welfare programs and low-income citizens. This was a strategic move to keep more transaction fees inside India. China has UnionPay, a state-backed card system created in 2002. It is now one of the largest payment networks in the world, accepted in over 180 countries. For many years, UnionPay was mandatory in China, meaning Visa and MasterCard had little power in the Chinese domestic market. After Western sanctions in 2014 and again in 2022, Visa and MasterCard pulled out of Russia. In response, Russia pushed its own system called Mir. Today, Mir cards are the backbone of domestic payments there, showing how quickly a country can pivot when forced. Each of these countries recognized the risk of dependency and built local systems to protect themselves. Even Europe, with its massive economy, has realized the risks of depending so heavily on Visa and MasterCard. That's why several major European banks and payment companies came together to launch the European Payments Initiative, or EPI. The goal is to create a single, unified digital payment system across the European Union, one that works for cards, online purchases, and instant transfers. Right now, even though Europe has the euro, most card transactions still run through Visa and MasterCard, meaning fees and rules are dictated outside the continent. By building its own system, Europe hopes to keep more money in its financial ecosystem, give consumers cheaper options, and, most importantly, reduce its dependency on U.S. corporations. This shows that the concern isn't just for developing nations like Jamaica. Even rich and powerful regions see the need for financial independence. So, why doesn't Jamaica have a homegrown system like RuPay, UnionPay, or Mir? The answer comes down to scale and economics. Building a domestic payment network requires massive investment in infrastructure, partnerships with merchants, regulatory oversight, and public trust. Countries like India and China have populations in the billions, making such investments worthwhile. Jamaica, with under 2 million people, simply doesn't have the transaction volume to make a local system profitable. It would cost hundreds of millions to build, but only serve a small market. As a result, Jamaica relies on Visa and MasterCard because they provide ready-made global infrastructure that's too expensive to replicate locally. This contrast highlights the difference between large economies and small economies. Big players like China and India can afford to build their own systems and even export them globally. Smaller nations like Jamaica are locked into the networks of Visa and MasterCard whether they like it or not. In other words, Visa and MasterCard don't just control banks in Jamaica, they control banks in most small and medium economies around the world. So, do Visa and MasterCard really control Jamaica's banks? Not in the sense of owning them or running their day-to-day operations, but when it comes to digital payments, the lifeblood of modern banking, the answer is yes. Jamaican banks, businesses, and consumers depend entirely on two foreign companies for something as basic as swiping a card or buying online. That's a level of control that goes beyond convenience. It's structural dependence. Meanwhile, countries like Brazil, India, China, Russia, and now even Europe show us there is another way. But for small economies like Jamaica, the costs of building a local alternative remain too high. And it's not just Jamaica. Many big countries around the world are still in the same boat, relying almost entirely on Visa and MasterCard for daily transactions. For now, there's no immediate risk. The networks run smoothly, the payments go through, and life continues as normal. But it's still something worth thinking about. What happens if one day the rules change and Jamaica, like others, doesn't get to decide?